The stream is still going. God, this is the warm-up. Okay, so let's get into this. First thing I see here, without looking at any of the research, without looking at any of the outlooks, any of the expectations, anything that anybody else wants to influence us on as far as trading goes. First thing I see is we have a gap trade. And by a gap trade, most people think of these price literally gaps like this. When I'm using these indicators, I'm looking at probability gaps. The probability gap is the space between two peaks in this distribution of the indicator called range probabilities. We're looking at this peak here, which says throughout the chart's history, there's been a cluster of tops for the month right around here relative to the open. Same thing with here, same thing with here. Oh, there we go. And now in between these peaks are your troughs where you get lower probabilities. You can see the exact probabilities on the right-hand side. So you can see the numbers here are highlighted and larger than the numbers right here. And then these numbers are large. So these generate your peaks, these generate your troughs. And right here we have quite a wide trough. Oh, delete all of these drawings. So now that we know where the peaks and the troughs are, what's this gap? The idea is like a breakout, except when price starts moving up into these lower probability areas, you set the expectation that we're going to move to the next highest probability spot. So if we do set an expectation where the dollar yen goes higher, the expectation should be, hey, this whole area, this whole trough, we're going to trade and then go up, trade, make the top for the month around here, and then probably go down. Or if there's enough fiscal stimulatory expectations out of the yen, we could then go into nowhere's land, and this is all tail risk. That's the tail of the distribution. We can draw a line and say at this red line, that's where we get the threshold between when we start experiencing more significant likelihoods of seeing really far off, really super high, above 160 tail risk pricing. Should dollar yen have a sharp reaction and test 160, one can expect intervention in the FX markets. Conveniently,